Hello everybody, welcome back to my channel. So AIM's Apac REIT has just released their first quarter 23 numbers, and I have three very cool updates indeed. So first of all, the DPU status, and subsequently rate hikes. Of course, any decent REIT investor will be concerned about such matters, isn't it? And last of all, the M&A situation. So last year, actually, they did a very big, in my opinion, or at least very decent sized acquisition of the Woolworth building in Australia. So you can see the building in the background over here. It's quite a massive plot of land. So built up area over here and quite a fair bit of empty space as well, isn't it? So this is quite interesting, I think, for the future and whether or not you could maximize the potential of this plot of land. So with the DPU, it's pretty much a steady ship, isn't it? Year on year, it's up 1.3%. Mostly I think contributed by the Woolworth acquisition last year. Um, and this number over here is really impressive. The rental reversion in the quarter is 9.5%. So we'll look at it subsequently in a bit more detail. And the rest of it is pretty stable-ish, I guess. Leverage ratio around 37%. Cost of debt 2.7%. Seems to be a bit lower as well, which is quite funny, right? Given the rising rate situation. So I think they made use of the opportunity to refi favorably where possible. And of course, let's look at the balance sheet interest rate risk management, because of course the main concern is the Federal Reserve raising rates like bananas, right? And it looks actually very nice. If you look at it, 88% of the debts are actually fixed, so 65% are fixed rate. And I think this portion means 23% is floating, but they've hatched it to fixed rates through IRSs, so interest rate swaps, right? So essentially 88% are on fixed terms, leaving just 12% unhedged. I guess you always want to have, well, you prefer to have a little bit unhedged for some flexibility. If you look at the FX management, 68% hedge as well. So it looks pretty well managed actually. On this basis, I think there's not a whole lot to fear about the rate hike in the near future at least. So the way I look at it is via the debt maturity profile, and look, this looks really nice, right? So in 2023, FY23, everything is refied already. You have no refi requirement for FY23, and for FY24 only 4%. So essentially for the next 2 years, you have little refi requirements. And after that, 26% will come in 2025. But that's 2+ years away, right? 2.5 years away, right? So if the Fed hikes in the next 2 years, there will not be much of an effect because there will not be a refi need for this blocks over here. And the repricing will apply for the floating rate only, and that's 12%, right? And as we saw just now in the previous slide. So I think from an interest rate hike management point of view, this balance sheet is actually very well shielded. One of the better shielded balance sheets amongst the S-REIT space, I think. So well done, Brooks. As for the properties with the acquisition of the Woolworth property, you can see that there are three over here, and these are quite big size. They're on the seaboards of Australia on the eastern coast, where the dynamics are actually quite nice. If you're a frequent traveler to Australia, Sydney, Melbourne, Brisbane, the Gold Coast, you will understand what I mean. Dynamics are pretty favorable over here, and the Singapore core, of course, over here. This is, of course, the number that I was talking about just now, and looks very nice. For the last quarter, we got a 14.7% rental reversion, and this quarter we got 9.5%. So this number over here is proving not to be an outlier. It seems to be some sort of a positive momentum going on over here. But they didn't mention which property or the asset class which is undergoing such reversions though. So I wonder if it's the logistics and warehouses, or the industrials, or the business parks, or the high techs. It might be the warehouses though, because the logistics and e-commerce sector is pretty demand right now. There's a pretty sizable demand for warehouses, But this is just my thinking. They haven't really talked too much about it though. I guess we have to wait for the first half results to come out, and maybe to release a bit more granularity into the numbers. As for the lease profile, it looks pretty nice as well, right? You have around half of the leases on long terms and stuff over here are on short terms. But if the positive rental reversion dynamic continues on, all this stuff will benefit from releasing, right? And they can lease up. So it depends on the economy and the rental going forward. But it looks like a pretty good mix between stability and growth. And lastly, the M&A opportunities, right? They updated that the acquisition of 315 Alexandra Road did not go through. Man, this stuff took such a long time, more than 1 year, right? But I'm not sure what happened, but it didn't go through eventually. But there were media reports, and they subsequently went out to clarify that they were indeed looking at the proposed acquisition of this property in Macquarie Park, Sydney. So this is the Avaya house, right? Avaya house. So there might be an opportunity to acquire something over here in Australia, as opposed to this stuff in Alexandra Road. I quite like the acquisition if they do it though, because if you look at the previous slide, there are 3 properties over here, and if you add on one more in Sydney, it looks like a bit more focused on the eastern board of Australia, right? Which is pretty nice, right? Because it's probably gonna be freehold or maybe a very long hold property. So this can extend the weighted land expiry as well, right? Which is always something nice, right? Because in Singapore, the land leases are a bit problematic, right? So with that, we came to the end of this video. It's just a first quarter update, so there's really not much. My main purpose was just to find out the impact from interest rates, and I think it's pretty well covered actually, well shielded. So if you like what you saw from this video, and thank you for spending some time, a few minutes of your life watching this video. Remember to subscribe, like, share, comment, say something, and I'll see you soon.